Assalamualaikum and good day. We are glad to have with us Professor Datuk Rifaat Ahmad Abdul Karim, who is currently the Chief Executive Officer of the International Islamic Liquidity Management Corporation, or IILM, and the recipient of the Royal Award for Islamic Finance 2016. Professor Datuk, welcome to Viewpoints at the Royal Award.
Thank you.
First of all, congratulations on being the recipient of the Royal Award for Islamic Finance 2016.
Thank you.
And hopefully through this conversation, you may share with us your experience and insights on Islamic finance.
My pleasure.
I would like to start by asking you on some background of your long and outstanding involvement in Islamic finance. Could you share with us your diverse experience as an academician, accountant, Secretary General of standard setting bodies, and as Chief Executive Officer?
As an academic, I never gave it up. I still publish, and now I focus only on Tier 1 journal, i.e. the top journals. Initially, it wasn't easy to publish in Islamic finance because the journals would say to you, we don't have an audience for that. When I started doing that, that was 1981, after I finished my PhD, which was not in Islamic finance, nor was my master, nor was my undergraduate. And as I said before, my colleagues at the University of Jazeera, where I was located in Sudan, they used to laugh at me, being somebody who looked at Islamic finance. But I had a passion for that. And so until now, I still publish papers, write books. In fact, my forthcoming book is coming in February 2017 by John Wiley. That's the fourth book that John Wiley publishes for us. It's in Islamic capital markets, products, and markets. Prior to that, they also published 3 books for us. The Regulatory Challenge, the one that addressed how banks should cope with banking, with Basel II, and then we have the New Regulatory Challenge with Basel III. And prior to that, we had also the Takaful one. So more or less, John Wiley with us covered all 3 main sectors, the banking, the insurance, and the capital markets. And my other 2 books, one of them was by Euromoney, a general one. That was also listed as a best-selling book by Euromoney. And the first book I published was Business and Accounting Ethics in Islam, in the UK by Mansell. That was published in 1990. On the standard setting side, I was invited to be initially the consultant for IOFI, and I was the inaugural Secretary General in 1995 in IOFI. And there, I think people will remember that I was the first one to establish the Sharia board there, because I discovered that in order to do accounting standards, you also had to have the harmonization from a Sharia perspective. And that's what drove us at the time, or motivated us, to establish the Sharia board at IOFI. Later on, we started thinking about having the prudential standards issued by IOFI. The idea was to establish IOFI as the single standard setting body. But then the central banks didn't like it. They wanted the IFSB, the Islamic Finance Service Board, the prudential standards, outside a private sector body, which they did, and Malaysia bid for that, I think in the year 2000, in the IMF meeting in Czechoslovakia, when the relevant governors met there to discuss this. Malaysia put its request to have the IFSB established in Malaysia. It took us 2 years to have the IFSB there. Once they got it, they also asked for the Secretary General of IOFI, myself, to be the inaugural Secretary General of IFSB. When the IFSB started, we were only 9 members, and when I left in 2011, April 2011, we had 191 members, which included 54 regulatory bodies, supervisory bodies, regulatory and supervisory bodies, like the Central Bank of Japan, Central Bank of China, Singapore, Philippines, Hong Kong, Luxembourg, and others. Together with the IMF, the World Bank, the Islamic Development Bank, the Asian Development Bank. So these multilaterals also joined. And these were only, it was the exception of the IDB, the Islamic Development Bank. These were only given the membership status of an associate. And only the full members, like the central banks, would be able to make a vote there. So by being an associate, they didn't have any voting right. And so we also had the private sector there, the market players, as observers. And they didn't have, of course, any voting right. And so it was in the hands of the central bank, who used to sit on the council. But in certain cases, for example, in Jordan, where you have three bodies that regulate, first you have the central bank that regulates the banks, and you have the capital market authority that regulates the capital market, and you also have the insurance regulators. And so when the IFSB developed having all these bodies as members, we said they will sit, the central banks will sit there in the council. When we have a relevant standard relating, for example, to capital markets or to insurance, they will invite the relevant regulators or supervisors to sit with them to pass that standard. And so we had, for example, from Malaysia, we had this, at the IFSB until now, I think they have the Central Bank, Bank Negara, and they have the Securities Commission as members, because Bank Negara supervises both the banks and the insurance. And then when at the IFSB, I thought about the ILM, and we established the ILM, and I've been asked in October 2012 to come and engineer how to publish the Sukuk, which we did.
Now, at the beginning, what were the challenges faced in Islamic finance? And how did you and the organizations that you helm went about overcoming these challenges?
One of the basic challenges was Islamic finance was not known as a critical mass. And hence, these organizations helped to add some of the specificities. How? For example, if you take the IOFI, at the time, you look at the financial statements of Islamic banks, they were influenced by what the auditors of those banks were doing. And the auditors were only trained in international, what is now known as International Financial Reporting Standards. At the time, I think it was International Accounting Standards. That rendered the financial statements of the Islamic banks to be non-comparable, because it depended on the interpretation of the specific transaction of each auditor, how it advised its banks. For example, in the Murabaha, which was, I think, was and is still very popular product in most Islamic banks, when do you recognize the profit of a Murabaha? If you look at the equivalent in conventional, you will see that it's installment sale, for example. Installment sale divides or separates the profit from the interest. The interest is recognized when it is due, but the profits, if it satisfied all the recognition criteria, it will be immediately recognized. In the Murabaha, you cannot split the two. And so the question was, when would they ever recognize the profit of a Murabaha? Some, like Bank Islam here in Malaysia, at the time, they used to, for example, recognize the profits when the installment was received, cash basis. In Sudan, where all the installments of the Murabaha was received. In Kuwait Finance House, because it was mandated also to follow international accounting standards at the time, they would recognize it when the installment was due. So this different interpretation, one accrual and two cash, and even in the cash you have two ways, this rendered the financial statements of Islamic banks to be non-comparable. And so this was one of the challenges. Same thing for the IFSB. At the time, how would you calculate for example, investment accounts? When the Islamic Banking Act in Malaysia 1983 was promulgated, it defined Islamic accounts as a liability. Is it a liability? I'm not sure about that. I don't think it is. Because the profit-sharing investment accounts are governed by the Mudaraba contract, which says that in case of loss, not due to misconduct and negligence, the client will take that loss, right? Will be exposed to that risk. If the results of the transactions funded by the bank results in a profit, it will be shared by the bank as a mudarib and the client as a provider of fund Rabbul Mal, according to a percentage that was to be decided before the transaction starts even. So I think one of the major developments that took place here in Malaysia was that when the Islamic Financial Service Act, the 2013 one, when it came out, it defined investment accounts as appropriate one, right? i.e., you have to bet the results, whether it's a loss or a profit. And the banks will have to tell also the clients before they change to that. I think that was a part of a consumer protection or something like that. Now, these were rendered, if you look at them, some central banks wouldn't allow the Islamic banks at the time, before they recognized it as a mudaraba, some central banks wouldn't even allow the Islamic banks to pass the losses to the client. Why? Because that for them may trigger a systemic risk, and they had to manage the systemic risk. It was the responsibility. So they wouldn't. Others allowed it. That allowed also non-comparability. And so it was important to harmonize through a standard, right, the prudential as well as the accounting side. For the ILM, the banks only had the commodity murabaha as an instrument to manage their liquidity. And as we said, the commodity murabaha can generate profits, but it would not be tradable, because once you conclude the murabaha, it becomes a receivable. And in certain jurisdictions, they don't allow the sale of debt. And so whatever these institutions manage to contribute to the challenge is, first of all, the standards to make the financial statements or the prudential regulations comparable. And IOFI also had to issue the standards, the Sharia standards, which although may not be mandated, but I doubt if any of the Sharia committees will go against the IOFI Sharia standards. The reason being is that this IOFI standard Sharia standards are promulgated by 18 or 15 members, right? That's a majority, more than the 2 or 3 who sits on a bank.
So ILM has actually, to much extent, impacted the Islamic finance scene in terms of liquidity.
True, and until the last auction, we issued and reissued 20.03 billion, not million, billion US dollar. Why do we call them reissuance and not a rollover? They are not a rollover because in a rollover, usually you roll over with the same terms. Ours, you have a new price, you have a new size, i.e. you may put 860 for the auction, or you may put 1 billion, and you also have a different allocation to the primary dealers. You may give one primary dealers in one auction 50, in the following auction you may give them 100. So all the major variables differ, and the best way we call them is a reissuance. Although it's the same asset, we get it for long term because these are sovereign assets. The sovereigns like to have a long term, so we get the asset for a long term, but we issue the short term, so Sukuk of the ILM, once every 3 months or 6 months, whatever, less than 12 months. Once you do it, it will be less than the period that was given to you by the long-term sovereign asset.
What is the role of Islamic finance in the real economy, and how do you support by saying that Islamic finance is a viable alternative to conventional finance?
Okay. In Islam, you cannot sell or lease what you do not own. So you have to provide something real in order to sell. If you go, for example, today to Bank Islam or to any of the banks here that has an Islamic business, if you want a mortgage, for example, they will not give you a loan for the mortgage, right? They'll have to buy the asset, the house, and sell it to you. Now, that is where it ties up, because they cannot give a loan. You see, it ties up the real economy, the real asset, with what their transactions is. You cannot sell or either you cannot sell what you don't own or lease. That's fundamental.
Let us look at the opportunities in the industry. How has the Islamic finance industry evolved and grown in the past decade? And what are the opportunities for growth?
Okay, I think Islamic finance, when it started, was very small. Nobody paid attention to it. But what made, in my opinion, what made people start looking at it and taking it into consideration is its resilience during the last financial crisis, because it didn't get in one of those toxic assets. You wouldn't find it. In the Sharia committee wouldn't allow it in any of the banks. And hence, I think it started to grow, but until now, it represents a very, very small percentage of the total global Islamic, total global financial industry. The Islamic finance represents a very small percentage of the global financial industry. And hence, they have to come, I think the Sukuk is probably it, but one of the major factors is how countries that adopt Islamic finance will back it in order to grow. You have the backing from prudential, from legal side, all these infrastructure, the prudential side, the accounting side, all these would help, for the industry, will help the industry to grow, sorry.
So after the global financial crisis, people have become more aware of Islamic finance.
They do. Yes, they did, sorry.
Now, do you think that this awareness is because of a greater understanding of what Islamic finance stands for? And is there an increase in the demand for Sharia-compliant products globally?
I'm not sure whether it is due to a greater awareness of Islamic finance, because until now, if you ask the majority of the masses, they wouldn't know. That's put a burden on Islamic finance to create awareness about it. But I said that it depends how the country becomes user-friendly or friendly supporter for Islamic finance. If you take the case of Malaysia, for example, here the country represented by all the regulators, right, they support Islamic finance, starting with Bank Negara and then the Securities Commission. In Securities Commission, you have they regulate also the Bursa here when they have a standalone Sharia-compliant stocks, and those are not. So that's a backing for it. If you look at Bank Negara, when in 2000, if you look at the annual report, there was nothing much to say. But now, if you look at the annual report of Bank Negara, you will find a lot to be said about Islamic finance, meaning they have a lot to say. If they don't have something, how could they allocate a whole chapter to Islamic finance? Malaysia was credited at a point in time to be the largest Sukuk issuer until they stopped, right? And they have also come up with the Islamic Financial Act, which is another major step forward for the first time. What would happen if you don't follow the Sharia rulings of either the bank or the one of the High Sharia board, like that of Bank Negara or Securities Commission? I think you can be criminalized and taken to prison. I think so. Whereas in the past, I think the judges used to, up to their own interpretation. Now the Act forces them to seek the advice either from Securities Commission or from Bank Negara for the same transaction or for the transaction on which they are going to rule. It's not up to the judge to make their own interpretation, because most of the judges were not trained in Islamic finance. And people think that because we are Muslims, we tend to know Islamic finance. That's not correct. We have to understand it. We have to understand the specificities of Islamic finance in order to be able to make a judgment or a ruling there.
What is your view on the impact of Islamic finance principles in the increasing demand for socially responsible investment product by both Muslims and non-Muslims, given the volatile nature of the global economy?
We believe that, or I believe that Islamic finance is responsible finance because it fulfills all the requirements of, in fact, some of the firms we see, like, for example, Arabesca and Satco, both of them provide in their asset management, they do, responsible finance, which is Sharia compliant. For them, it doesn't make any difference, my understanding. And so I believe that responsible finance is Islamic finance. And the more Islamic finance can highlight its specificities and what it can contribute to the global finance, I think it will provide that also for responsible finance.
Professor, as we come to the end of the program, I would like to ask you, as the recipient of the Royal Award, what do you want to achieve and how would you do this?
I think my contract with the ILM will expire in 2018. I would like to retire, and then I would like to write more and more about my experience. I haven't stopped writing, as I said, but I would like to reflect my experience in writing. That's what will leave it as a legacy for others to follow, to read and follow it. You know, that's what I would like to do, is to sit down and write as much as possible, my experience.
So it's actually from academic.
It has to be, because yes,
moving to standard settings and then finally going back to
academic.
Yeah.
Yes.
Finally, my last question is, what is your advice to people who want to pursue a career in the Islamic finance industry?
They have to understand the specificities of Islamic finance very well and the implication. First of all, you see, if you are educating conventional finance, as I was, and then you try to bring something new, the alternative Islamic finance, you have to understand the specificities of Islamic finance and what will be the implication of the conventional finance on Islamic finance. These are important. If you don't understand the specificities, I don't think you can do it. And I give you an example. We looked at, some of my colleagues and I looked at, it was published in a reputable journal, the International Journal of Theoretical and Applied Finance, and I think the editor at the time was a Harvard professor. We looked at the cost of capital. Every student of finance is taught the cost of capital theory, which was developed by Meriglano and Miller. What I did initially was to look at what would be these from the specificities of Islamic finance. Because in Islamic finance, you don't have, for example, any interest-bearing deposits. You have the profit-sharing investment accounts. And so literally, the implication was that you don't have any financial risk. Why would, what Meriglano said that is that as you increase debt, that's their response to the conventional people. They said, as you increase debt, shareholders will also fear that you will not be able to repay your financial risk, and so they will, the shareholders will ask for a higher return. But here, if you take that debt out, i.e. you increase the investment accounts, what would happen for the shareholders? In reality, the more for the Islamic bank, the more they mobilize funds in profit sharing, it will not increase any financial risk. Why? Because if it's a genuine loss not due to misconduct and negligence, the provider of funds, the client, will bear that risk, right? But if it turns out to be a profit, then they will share. So they are inclined or encouraged to mobilize more and more of these investment accounts, unlike when you do in the interest bearing. People will say, there's a financial risk there, right? You got more of your debt. How are you going to meet your obligation? First of all, the rate of interest, and then, of course, to pay it back. This is what I think you have to look at the specificities and the implication, just like I highlighted in this small example.
Okay, thank you so much, Professor Datuk, for being
pleasure.
with us on Viewpoints at the Royal Award. And congratulations again for being the recipient of the Royal Award for Islamic Finance 2016.
Thank you.
Professor
It's a real
Datuk.
pleasure to have that award. Thank you.